Hello there, my name is Kevin Carlson. I'm a mortgage broker here in Canada. Thank you so much for joining me on my channel to learn a little bit more about mortgage financing. Today I'm going to be talking about mortgages for those who are new to Canada, that have come here to live and work and are interested in purchasing a home. This presentation though is going to be speaking mostly about those that are looking to purchase a home with less than 20% down payment. If you are looking to buy a home and you're new to Canada within the last 5 years and you've got more than 20% down payment, well, then the programs available to you might actually be a little bit easier than what I'm about to illustrate. No matter where you're purchasing a home in Canada, the rules are more or less the same around mortgages. If you're purchasing a home with less than 20% down, then you have to have what's called default mortgage insurance. Now, default mortgage insurance is more commonly known as CMHC fees. CMHC is one of the mortgage insurers. It's actually the one owned by the federal government. Mortgage default insurance is not meant to protect the homeowner. It is meant to protect the bank. This default insurance protects the bank in case you default on the mortgage, which means stop making your mortgage payments, and they have to foreclose on the property in order to take it back and be able to sell it to pay off the mortgage that's gone into arrears. The mortgage insurance premiums that get charged are actually added to your mortgage for the most part. If you want, you can take those mortgage insurance premiums and pay them on the closing day, but over the last 15 years, I've only had one client that even chose to do that. If you are purchasing a home and you're putting 5% down, then the default mortgage insurance premiums are the highest. The default insurance premiums go down a little bit for every extra 5% that you put down. So the premium at 5% is the highest, and 10% goes down a little bit. 15% down payment, the premiums go down a little bit further. If you want to try to avoid paying those mortgage insurance premiums, then the down payment has to be 20%. The default mortgage insurers in Canada are CMHC, or Canada Mortgage and Housing Corporation, Genworth Financial, and Canada Guaranty. Each of the mortgage insurers has their own highly specialized program that helps new Canadians purchase a house with less than 20% down. The programs are more or less all the same, just a couple of minor differences, and they all have different names. So CMHC has their Newcomer program, Genworth has their New to Canada program, and Canada Guaranty has their Maple Leaf Advantage program. Even though the mortgage insurers all provide more or less the same product to new Canadians, there is one big difference between CMHC and the other two. Under the CMHC program, if your residency status is as a temporary resident, so not a permanent resident, the minimum down payment is 10%. Under the Genworth and Canada Guaranty programs, however, your down payment's a little bit less. It's only 5% down. So that's the minor difference between the three different programs. Let's go over the commonalities and the things that you need to have in place in order to be approved for a mortgage like this. You must have come to Canada within the last 5 years. You must have a permanent residency or be a temporary resident with a valid work permit. You must have full-time employment for a minimum of 3 months. But if you are here under a corporate relocation program, that 3 months can be waived. The maximum purchase price of the home you're looking to buy is $1 million. Now that I've gone over some of the basics, let's go over a little bit more detail on how soon that people can purchase a home after arriving in Canada and what the minimum down payments are under the different programs. The biggest determining factor in how soon somebody can purchase a home here in Canada, sometimes as soon as 6 to 12 months, is their previous credit. If you're coming from the US or any other country where you've had credit cards and loans and that sort of thing, reporting on standard credit reporting agencies like Equifax, TransUnion, and Experian, then you've established some credit history in your country of origin, and it's going to be much easier for you to get approved for a mortgage here. As long as your credit is acceptable and from your country of origin and showing up on your international credit report, you should be able to purchase a home in as soon as 3 to 6 months with as little as 5% down, depending on your immigration status. I would encourage anyone who has credit outside of Canada to keep the payments up with that. If you've got a credit card or a loan that's still outstanding outside of Canada, make sure that those are paid as agreed. If you miss any payments on those credit items and it shows up on your international credit report, that's going to make it a little bit more difficult to get a mortgage here. If you're not quite sure that the country that you come from has international credit reporting and credit card items would show up, then there is a Wikipedia entry that I will link to below that lists many countries in the world that does have credit reporting and the agencies that there are. If you'd like to try to get in touch with some of them and you're having some difficulty, please get in touch with me and I can help connect you with one of those credit reporting agencies. So what if you have never had a loan or a credit card in your country of origin, and perhaps that wasn't even a common practice there? There is other ways to help to establish what your credit history and credit pattern would be to assist you in getting a mortgage here in Canada. If the bank that you were dealing with in your country of origin was a fairly large one and internationally known, like HSBC, Wells Fargo, or TD, Scotia, then you might be able to get a letter of credit reference from your bank in your country of origin. This can go a long way in helping to establish a credit pattern and make the lenders here in Canada more comfortable working with you on an ongoing basis. If there's a little bit of weakness in your previous credit pattern and you don't have the traditional ways of being able to establish a credit, then increasing the down payment can be another way to assist with the mortgage process. Increasing from 5% to 10 or maybe 15% down payment will make the lenders more comfortable in working with you if there's a little bit of thin credit in the past. So what if you come from a country where there is no credit cards and no credit reporting, and you had really not much for banking and you can't get a letter of credit reference? Well, you're gonna have to start from scratch and establish your credit here. Generally, when you arrive here in Canada and you're starting from square one without any previous credit history outside of Canada, then you're gonna have to rent an apartment and not be able to purchase a home for at least 12 months. Establishing your credit here in Canada means get a credit card right away. Every person in the household that is going to be earning income and eventually going on to the mortgage must get a credit card set up as soon as you arrive in Canada. This helps to get your credit going fairly quickly. Make sure that all of your payments on your credit cards, at least the minimum payments, are made in full and on time or even early. Paying off your credit card balances in full every month will certainly save you interest costs, and that's a really good idea to do anyway. Another thing that's going to be required is a 1-year confirmation that you paid your rent on time. So any person that is, like I said, in the household and earning income, make sure that their name is on the lease or rental agreement for the house or apartment that you're living in. After 12 months of living in the apartment or house that you've rented, then that can actually act as a credit item. Once you're applying for a mortgage, we ask for the rental agency or the landlord to provide a letter confirming that you made your rent payments in full and on time for at least the last 12 months. If a letter from the landlord or from the rental agency isn't available, then copies of your bank statement showing the rent payments coming out of your account will certainly establish the same thing as well. Make sure that the rent payments are made by check or by online banking transfer to the landlord. If you pay your rent by cash, especially without a receipt, it doesn't really show much of a pattern in case we can't get the landlord to write a letter of credit reference. Also make sure that any people who are on the rental agreement, on the lease agreement, on the apartment or house that you're in, that their name is also on the utility bills like the water and electricity. The water and electricity bills can act as another credit item for the last year and just show that those payments have been made in full and on time. So those three things, the rent to your apartment or house that you're living in, your names on the utility bills, and your new credit cards will certainly go a long way to helping you establish your credit here in Canada so that when you go to apply for a mortgage to purchase your first home, you won't run into any obstacles. The minimum amount for a typical person to purchase a home here in Canada to get their stuff established is at least 6 months, if not 12, depending on how much credit history you might have had previously. Once you've been living here for a full year and you've got rent payments and all those other credit items I spoke about, then you shouldn't have any trouble applying for a mortgage with at least 10% down, if not a 5% down payment. Speaking of down payment, let's go over that part as well. If you are transferring funds from outside of Canada to be able to use as down payment for the purchase of a house, I highly recommend that those funds be placed into your bank account at least 3 months prior to engaging a realtor to start looking for your first home. The minimum down payment is that 5% level, and those 5% funds have to be from your own resources. Down payment is highly regulated here in Canada, And so pretty much anybody who is purchasing a home is required to provide the last 3 months of bank statements where their down payment funds are. All of their deposits are going to be scrutinized. So any deposits that are payroll is certainly fine. But if there's any deposits to the accounts where your down payment is that can't be explained as payroll, then you're going to have to provide follow-up documentation and an explanation as to where those deposits came from. Once you've proven that the first 5% funds are from your own savings, from your own income, then that's certainly fine. But if you're going to be putting any additional funds down, then you're going to have to track those funds as well. They can come to you as a gift from an immediate family member. So that means mother, father, sister, brother, or grandparent. Funds from borrowing from a line of credit or from other sources is not allowed in mortgage lending. That's about it for these new to Canada programs. If you have any comments or concerns, certainly comment below. I'll do my best to reply as soon as possible. I've got quite a few other videos on just standard mortgages and Purchase Plus mortgages that dive a little bit deeper into the mortgage process. So have a look at those and I'll link to them in the description below. If this isn't the first video of mine that you've looked at, then you might want to consider subscribing to my channel to be notified when additional videos come out. If you live in Canada, or if you're about to, and you're looking for some mortgage financing, I would be more than happy to work with you. Please contact me through my website, and I'll get back to you as soon as I can. Thank you so much for your time, and have a great day.